Welcome in everybody to an evening of technical analysis. My name is Gav Blacksberg and I run the Wolf Financial account, which you could see if you're co-hosting with me. And I am going to be your moderator for the evening. Please make sure that as my speakers are talking, I highly recommend checking out their profiles. They have some really good content. Most of them post avidly throughout the day as well, and they're all masters of technical analysis, at least in my humble opinion. With that being said, let's get right into it. Jake, is now a good time for you to speak?
Yep.
Awesome. Well, then I'd love to turn the floor over to you to go first. And since we've done some basics, some technical analysis, if you want to give maybe a minute or two on your process, that would be great. And then if there's any, individual names or processes or anything that's kind of piqued your interest over the past week, we'd love to hear about that.
Yeah. Well, thanks for having me as always. Always good to be on these. My process always starts from
Did he cut out for you too, Richard?
Yeah, he did.
Yeah, he cut out on my side too.
That's the biggest suspense builder I've ever heard.
setup. Oh, can you hear me?
Yeah, you're back on, Jake.
Oh, okay. Where did you lose me?
You started with my process is, and then you paused for suspense.
All right. Oh, that's weird. I was talking the whole time. Okay, so yeah, my process really is focused around a top-down approach. So, I'm not going to look at any individual setup until I look at how the broad markets are looking. The broad markets are kind of that driving force behind individual names. So, if the broad markets don't look good, then the probability of an individual name playing out with a setup is lower than it would be if the markets were in play. And I'm talking about long setups. I'm generally trading the market long. I'm not a big short person. If I think the markets are going to go down, I'd rather just go to cash or kind of raise some capital rather than try to be a hero and short the market. So for me personally, if the broad markets are looking good, then that's kind of my first step into jumping into some individual names. And then once that's kind of in play, then I start to look at what's kind of trending and what's maybe even lagging the markets a little bit. A lot of people play leaders. I kind of like to look for things that are lagging a little bit. And so, IWM was a great example of this. IWM's finally breaking out, but it's been on my radar for a while and something that I've really thought looks good into November with the seasonality and the technicals aligning. So, for me, I'm kind of looking at names that haven't started making that move yet. So, things that are a smaller cap. When I say small cap, I don't mean $50 million market cap. I mean more or less, $1 billion to $2 billion or, even $3 billion market cap. And so, I'm starting to look at some of those individual setups. Tilray is one that I really like. GRWG is one that I really like. We're starting to get into some of those times of the year for weed names that things start to move pretty well. Electric vehicles have already started to make a move. I like the charging aspect of EVs. So Blink. If you look at Plug Power or Fuel F Cell, those are all kind of providing ways to power electric vehicles. Some of them are charging stations, some of them are alternative ways of battery power. But all in all, those are the types of names I'm looking at. The names that are almost lagging the Tesla move. So BLNK was a great trade to take pretty much last week, or maybe like that Thursday or Friday is when I initially got in that one. Held it for about a week. So I'm definitely not someone who's trading something and planning to get out in 5 minutes or even a day. Sometimes you'll have a big spike and, it makes sense to get out the next day if it's a big enough spike. But, for me, I'm mostly looking at 1 to 3 weeks generally is kind of my window of the setup to play out. Another one, and I'm sure Brian's going to be laughing at this when I say this, I do like GE. GE is one that kind of goes against everybody's technicals here as far as, why would you get in that if there's other things moving? I have a thesis on GE mainly around the infrastructure bill, the fact that it looks almost identical to IWM before it made its move. They recently had earnings, so you kind of have that out of the way, and it's kind of lagging the overall market. So it's a mix of that. Boeing and GE both, I think will kind of help bring the markets higher, and so we'll just have to kind of see how it plays out from there. But those are definitely the names that I'm keeping an eye on right now.
Awesome. Thank you so much, Jake. And yeah, it's interesting that you point out there where other people may have a different, opinion on a stock like GE, which is a bit, blue chip and everything. And for you to look in there and say, I have a thesis and an opportunity, I think that's, well constructed often. And there's more that goes into that. I'd love to dig into it. I'm going to go around first, make sure everyone gets a chance to speak, and then we'll come back and dig into some more of these processes.
Great.
With that being said, I'm also getting a few DMs. I just want to let everyone know that this session is being recorded. Shout out to Angie from Black Fox Stocks, who is doing the recording for us. I'm going to upload that to the Wolf YouTube and Spotify. You can just search Wolf Financial in either platform and you can see them. And also, if you want to make sure that you are getting all that information, if you really want to be seeing all these spaces and everything, if you DM me and you drop me your email, I will add you to the calendar for spaces. And that way you'll have the opportunity to know when all these spaces are. And I'm going to start, I think, putting out recordings to the people that are on that list. So I have, I think, 350 people who have already shot me their emails to be on this list. So that lets you see when all my spaces are going to be. And as well as, I'm going to send out recordings and things like that to that list. So it's not any spam. It's just all stuff to do with spaces. With that being said, let's keep the ball rolling. It's a pleasure to have you back on, Brian. How's everything going?
Very good, Gav. Thanks for having me on again. And I like GE. It's set up nicely. It's got some energy coiled up here tight. It's back above the volume-weighted average price year to date, as well as from the peak that we saw in June. Looks like, Grandpa's stocks can get going here, and I shouldn't kid around. I shouldn't kid around about that because I have 2 grandchildren of my own.
Oh, that will be a good conversation for us tomorrow, because usually we both hate GE.
Well, it looks good. I'm not sure I would, I think that if you have a little bit more patience, I tend to gravitate towards the stocks that are a little bit more active than that. But, when you have money, you need to, just keep in the market, and you don't want to maybe be in the index because it's a little bit extended. And to look at a stock like this, like GE, a big liquid name, it had a little shakeout after that. It broke out and then had a little shakeout. Now it looks like it's back on track. I think it's a pretty limited risk and somewhere you could just put some money and not have to watch it as carefully as some of these other names that I gravitate towards.
Yeah, I'm going to have to look into this play now that everybody's getting all hyped on it.
Well, I wouldn't say that. I mean, it's a good, slower one, but I'm not all hyped about it by any means.
Okay, well, let's talk about some stuff that you are hyped up about. I've been seeing more and more of your charts this week. Plus, you've been dropping in with some comments, which has been awesome to see. And also to my speakers. I put out a live link for this. I tagged all the speakers in. If anyone's able to share it, that'd be perfect. We have about 500 people in here, and I think we could get closer to 1,000. With that being said, bringing it back to you, Brian, would love to hear some of the ones that you are hyped up for.
Well, I could talk about some of the winners, and everyone has big winners in this market. That's pretty easy to see. SI has been a huge one this week. Silvergate, I got involved in that at, where's my price? 162.10. So that's been a beauty. I've got this one called SGH, and I actually don't even know what they're called. I'm a bottoms-up approach. Jake was talking about top-down. I think that it's a market of stocks, not always a stock market, that there's always going to be something that if you're looking at enough names, you can find the ones that are outperforming and, have the ability to be able to continue to outperform. And when the market's a little bit, shaky, then I simply will take less share trades because that's what the market usually tells me is that the opportunities aren't there, or I'll just, go to smaller share size. But, for tomorrow, for instance, I think that, going back to the EVs, I think Lucid is still going to be able to make a pretty big run. And I think that, Rivian goes public next week. There's going to be a lot of demand for that. And I think people will be, starting to kind of look at some names like Lucid a little bit more ahead of that. Tesla, obviously, again, another new all-time high today, which is just unbelievable strength there. So tomorrow I'm looking at Lucid, basically, based on today's close. I think if it gets back above 38.65, that it's good for a swing trade with a stop probably just below today's low, so at about 34.20 or so. And you could probably tighten that up even to under the mid-morning low, which was $35.18. So you could probably, stagger a stop, 35.15 for partial, and then to give it a little bit more room, or just get out and revisit, 34.20 would be my worst case stop there. But that one, these things can go nuts. Look at it. Look what, Avis can do. If Avis can, double and triple in a couple hours, I think a stock like Lucid that's holding on to these gains has the potential to, test its highs from February, March, which are up at 60.65. So I don't like price targets and getting people all amped about a price target, but I think it's a high potential opportunity here with limited risk is the main thing that I like to focus on.
When you're trading one of these stocks which have been, incredibly run up here, are you trading with a tight stop loss?
Right. So if I'm buying above 36.85 tomorrow, I'm talking about stops at 35.15, which is $1.70 away, or 34.20, which is $2.65. So I will, base my risk unit around that. And if I, let's say I'm risking $1,000 per trade, if my risk is $2.50 per share, well, then I'll buy 400 shares. So that's the way that you want to look at it, not in terms of, the momentum is there. And we're in a really unique market where these momentum names will just continue to go at absurd levels. But Lucid has, it spent the last 4 days doing nothing, digesting these gains, and a very shallow correction. It pulled back to the rising 5-day moving average, which is a key for me. And it's stuck below today, the volume weighted average price from the peak on the 29th. So getting above that little peak today, is what really, I think, gets this thing pushing the late day high, which was just underneath that VWAP. And in fact, I'll put that on Twitter here in a moment when somebody else is speaking.
Perfect. Yeah, my last question for you, and then I'll roll on to Richard, is I've been seeing you charting a lot more crypto lately. I saw you did sushi with the great picture there, and you had Bitcoin, and I think a couple of others I've seen coming through. What's been the attraction to that?
I've been involved in crypto for quite a while. My first purchase of Bitcoin was 200. Now, I wish I had held it, but I didn't. But I'm a trader, so who expects this to happen? Certainly not me. Maybe a few people with their laser eyes, can have a better view of the future than I do. But I've been involved in crypto for a while, and lately some of these little guys have just gone bananas. Sushi, I did get stopped out of, but some of the ones that I put on Twitter this last week, I mean, they doubled, in hours. It was crazy. Sand, which I still don't know what they do, and I really don't care either. I bought it based strictly on the chart at I think it was about $1.55. Today, sand is trading at 3.29, and there's another one actually that I will put out there that I think above $1.04. That the graph GRT has the potential to make a really nice run here. And I'll put that chart up as well.
Yeah. And to my speakers, feel free to tag any charts up here. And also to the listeners, the reason why we're not doing just kind of, I guess, super basics of technical analysis is because we did do a call on that. And it is, again, uploaded on the Wolf YouTube and Spotify. If you go to YouTube and you type in Wolf Financial and you scroll back maybe like 2 weeks, you'll be able to see where we did like real in depth on how Brian has discussed with, anchor VWAP and all different types of technical analysis. And that's why today we're taking a little bit more into actual names and targets and things like that so that we can kind of implement it. But I'm happy to do more spaces on basics of technical analysis. Just wanted to space them out. with that being said, would love to go to you, Richard, for anything that's been on your radar this week, or if there's anything you wanted to share in the world of technicals.
Sure. So just going back to my overall strategy, I'm very similar to Brian. I think my kind of foundation is the can slim trading methodology from William O'Neill. So buying the highest quality growth stocks with the best fundamentals and technicals combined, and just trying to pick my spots and find areas where I can manage risk against. And in terms of what I've been watching recently, crypto has been an extraordinarily strong theme, both in terms of the actual coins, but also in terms of stocks. I own SI and Coin, really nice moves recently. I also have SoFi in the fintech space. And I think I'm very similar to Brian, although my time frame might be a little bit longer than him. He's a little bit more swing trading, but I'm trying to hold these usually after they break out from consolidation pivots, and then hold them as long as pretty much they hold above the rising 21 EMA. That's kind of my guardrail, my guideline for when to exit a position. But obviously, if there's some negative price action, some really significant drops on volume, some character changes, I might get out before the 21 EMA. But just in general, I'm trying to find rocket ship stocks that are changing how we work, live, and play, and catch on for the ride somewhere along the way while it's breaking out of a base, and ride that trend as long as it keeps working for me. And I usually get out as it starts to form another base. So that's kind of my overall time frame, and also kind of my general approach to trading and technical analysis.
Love it. And sorry if I made any noise over you there. Real quick, I know that Jake actually has to run. I have a couple questions for you, Richard, but Jake, I just wanted to give you a comment before you have to pop off, and then I'll go back to Richard. I think he's in the car, but I think he can hear me. Jake, any last comments there?
Hey, sorry. Can you repeat that?
Yeah, just wanted to pop over to you because I know that you have to get going. So any final comments on technical analysis or on upcoming stuff that you'll be working on? I know that you're always putting out watch lists.
Yeah. I mean, as always, I would say focus on what the charts are saying, not your, a bias or opinion. And there's a lot of people over the last 3 weeks who just were convinced the market was going lower. And if you just followed basic price action, it was pretty obvious we were going to continue higher. And just let the price action lead the way instead of being too worried about being right or wrong. So that's what I'll leave it at. There's a lot of names out there that have some really good setups. I'll be posting a lot of different charts tonight. Once I'm kind of back home, get Kuba to bed. So definitely check those out. I'll be posting those a little later. And yeah, thanks for having me on.
Absolutely. Take care, brother. Enjoy the family.
Hey, thanks, guys. See ya.
Absolutely. Okay, Richard, I'm going back to you. I'd love to throw a couple of specific names at you and get your thoughts. These are going back with some of the ones that we talked about last time. So first, Bros.
Bros, yeah. So I actually sold the rest of my position today. It just it undercut a recent range and also broke below the 50-day moving average on a 65 minute chart here. So I had half left. I sold some into strength, but I will be watching this because I think it's a really strong IPO. And if it sets up an inside day and does an inside day and up or some type of setup, falls back to the 21 EMA, or even the anchored VWAP from the start of this move, which is on 10/11, we had a big volume push up from the bottom of the IPO base. And that anchored VWAP right now is about 62.43 here on TC2000. So if we get some type of pullback to there, it also lines up with the top of the IPO base. It's always funny how those things kind of line up. But if we get a pullback to that, some constructive price action intraday, I'll be looking to rebuy this back because I think it's got a really promising story, great earnings, sales, margins. Everybody on Twitter is saying how there are lines out the parking lot at every one of these locations. And yeah, I think this is one to watch, a recent IPO to watch. And I'm out of it right now, but I'm still watching it pretty carefully. It's always on my focus list.
Got you. How about Coin?
Coin, yeah. So this is one I'm still in. Super strong up the right side here of its longer term base above the anchored VWAP from the IPO day here. and I entered this at 276.25 on an intraday setup as an undercurrent reclaimed that anchor view app from that IPO day. And this is so strong right now, but also extremely short-term extended. So it's just riding that 10-day to higher prices at this point. But I am trying to play this one for a longer move. But it is, let me see, about 14% above the 21 EMA. So once again, pretty extended. I won't be looking to enter it at this point, but I am just kind of holding my position because I think this is one of the leaders in the market. It's got the fundamentals, the earnings, the sales, the margins. It's got that new factor with the NFT marketplace. Obviously, the crypto adoption is going to benefit this company, and this is kind of the liquid leader to play that space as a stock. When of course you also want to have some exposure to crypto as well, which is something I need to research and learn a lot more about. But yeah, coin, it's been a little bit of a character change ever since the kind of push up on 1014 into 1015. That's really where I got it on my radar, trying to move up the right hand side of this base and finally being able to break through that anchor gap from the highs. I think was really significant. And I'm sure there'll be bases and pullbacks and consolidations along the way. But I am trying to play at least a half of my position for a longer move at this point.
Sweet. Love it. All right, Richard, I'm going to come back around to you shortly. Just want to work Exclusive into here. Exclusive, what's going on, man?
Just another day in paradise, man. Appreciate you having me.
Yeah, absolutely. I know that, we've been chatting it up. You've been riding this Tesla wave and some other stuff that's going on. So would love to hear a little bit more about, the technicals and how they factor into your process.
Yeah, definitely. I was gonna agree with Jake earlier about what he said. You kind of look at the bigger picture of some of these indices and some of the markets and some of the select sector funds, and you kind of gauge what the underlying stocks are going to do within those sectors, and you can kind of see what's underperforming, what's outperforming, and you can kind of make a selection from there. But of course, you want to also look at what's you know relatively strong as far as pre-market and after hours goes. It kind of draws your attention towards what could be happening. So I know Monday we spoke about Tesla and why I said I remain bullish on it, but it's going to provide a dip buy before it goes higher, and that's healthy for the pullback, and that's because of that channel that we saw since the 21st of last month, which we posted on Twitter. I'll tag it here in the space so people can see. But when you have that clear uptrend channel, it's really, really important to see if that base holds and if it bounces or if it falls below. So that was where, as we were discussing on DMs, that's where we bought on the dip. And of course, you saw the move today. So that was a really rewarding trade. I know a lot of people got a bunch of DMs about it. So really happy that other people made the trades. And yeah, as far as the process goes, technically, we're really looking for, a lot of people ignore the top losers for the day. And the top losers for the day always kind of give a new narrative as to where the stock may go in a week or two. So I like to mentally jot down some of the names that have been beaten down. And over the course of the next coming weeks or maybe even month, I'll wait for my opportunity. You always want to wait for the setup to come to you and not force the trade beforehand. And these top losers for the day or week or month are really, really beneficial when you're looking for names that have run out of steam and the bears have taken over, and you're just kind of waiting for your moment. You're waiting for a golden pocket to cross. You're waiting for a major support resistance level. So those are some of the other things that I look for when I'm trying to find a play for the week or the month. So yeah.
Can you talk a little bit more about some of those specifics, maybe just a minute or two on, the golden pocket or how you are finding your support and resistance lines? I think that's something that a lot of beginners, are always very interested in.
Yeah, no. So the golden pocket is just the 0.618 and the 0.65 Fibonacci retracement. Now, the anchor for those pivots really depend on the user. There's, of course, there's programs that automatically apply them to charts on, multiple softwares, but it's really, I think that there is a correct way to do it and there's an incorrect way to do it, but it really just comes with practice over time. The more you study price action and the historical movement of the underlying stock. And you know how everyone says the more you know the stock and understand how it moves and performs with news and reactions and earnings and all these other variables, it's really important to really get to know the stock you're trading. If you trade it frequently, like Tesla is one that a lot of people trade frequently. But again, those pivot points can be the high recent of the 10 or 15-minute chart, the 30-minute chart, the daily, the weekly, monthly. It just depends on how far out you're scaling back on your charts to find these levels of support and resistance.
Got it. Yeah, that definitely makes sense to me with putting those into place. So real quick, let's just do one individual name, and then I'm going to hop back to Brian. So on these recent SPACs that have been running, have you been playing any of them?
Not really. I know we talked about DWAC, I believe it was. I already forgot about it. Some of these SPAC plays, I don't really participate as much. One, because I've already got a lot of exposure going into the day from the day before on those risk-free swing trades that I carry over. But it's really more about kind of seeing where it's going in relation to the volume, what people are talking about. Because, as far as technicals, I love technicals. That's what I trade based on. But I'm also kind of having to adapt to social sentiment because it's really been a factor in a lot of these moves. And SPACs in general, or de-SPACs, is really not something that I have been actively involved with, but I'm always adapting, always adding more tools to the arsenal. So I'm focusing a little bit more on them lately, and yeah, I'm probably going to start paying attention to them more because some of these moves that, even if you get in late, it's just unreal to see how they they just keep moving. So the volume increases, the FOMO increases, so it's really risky to play, and that's usually why I stay out though.
Got it. Got it. Yeah, appreciate that. There's definitely a lot of risk in those areas. And I just did this podcast with a fellow named Julian Klimachko, who speaks a lot on different, like CNBC and other stuff about SPACs. And they actually are just doing like SPAC arbitrage. It's super interesting strategy. I recommend people check out the podcast when it comes out in about a week, where they're going into these SPACs that are trading below NAV and basically just holding them until they hit a slightly over $10 and then just selling and like repeating the process, obviously doing due diligence into the S1, Edgar, and just looking for, proper teams and everything. But yeah, it's a crazy market over there.
Yeah, absolutely. And shout out to Brian too, man. I love the anchored VWAP. We were actually, I think Zoom was the trade that I took today based on an anchored VWAP cross. So definitely a really good tool. Love using it.
Absolutely. Yeah. Let's bring Brian back into. So Brian, you've posted out a couple of charts and tagged myself in a few of them, or tagged the Wolf account. I would love to get some more detail on those if you wanted to talk a little bit more about, Anchor VWAP, how you're using it, especially I see the Lucid where you did that 15-minute chart and you kind of have it from the lows, from the second lows, and then from the high as well, kind of converging, and, how you interpret that. Might just be taking a second. Brian, can you hear us?
Oh, I thought you would. Okay, I'm good. Here we are. So the one on the left is the daily chart, and you've got the orange one, which is the year-to-date volume-weighted average price, and then the volume-weighted average price off that peak in February. In the February peak, the sellers had been in control, and you saw that the July rally came right up to it, and then about 3 weeks later, right up to it again. Perfect rejection at the basically break even point from trading from that high forward. So it often acts as a level of resistance that you wouldn't see in any other way. Also as support that you wouldn't see in any other way. So when we got back definitively above those volume weighted average price levels and they had flattened out, buyers were in control. The short sellers were losing. We know that for a fact, that the average price participant from that peak who was long is now making money, and the average short from that peak is now losing money, as well as since the inception. So all of the shorts are underwater here. Not all of them, of course, but on average, and that's what we look at in the market. We're not interested in one person or one group, but what is the consensus? And it's really the ultimate sentiment indicator. There's no bullshit about it. There's no opinion. It's straight fact. Here's where the buyers or sellers are in control. So on the right, we saw that this big rally occurred last Thursday, I believe that was. And, I put a volume weighted average price on the beginning of that. Now, it doesn't always work perfectly, but then we put one off the peak. And today we saw that one off the peak kind of held the stock back in the morning. It pulled in. And the good news was, I wouldn't have purchased it there anyways because it had just run from 33 to 36. So it ran 10% in just a few hours. It pulled back. It made a higher low. And now that higher low is the place where you could set a stop against. So my stops are never, a lot of people say, oh, I use a 6% stop, an 8% stop, whatever. And that's fine. It's better than not having a stop at all. But for me, the most logical place as a trend trader to put a stop is below the most recent relevant higher low for the time frame I'm engaged in, which is generally a swing trade, which might be 2 to 3 days, or hopefully it would be 2 to 4 weeks. But it's up to the market to tell me. That's why I don't do price targets as well. I'm not, I don't want to get anchored to, well, it has to go to 45, otherwise I'm not going to sell, and then ride it all the way back down. So that green arrow, to me, is an action point tomorrow. If we get back above that, it tells me the buyers are back in control from the peak we saw on this 15-minute time frame. You can see how it's kind of flattened out now. So that the average participant is, the scales, I like to put scales on these charts a lot, have kind of leveled out, and the supply and demand have reached this equilibrium here. Now it's up to the buyers to regain control and find that alignment with the trend on the bigger time frame. Hence the name of the first book I wrote, Technical Analysis Using Multiple Time Frames, Profiting from Trend Alignment. Big mouthful there. But the key is that I want to use the most recent relevant high or low, and that's why I'd mentioned the 2 points that were either 35. I'm sorry, I thought I wrote them down, but I didn't. So I've got to look at my chart. That first one is 35.18, that low that occurred, that first arrow. So I would put a stop maybe at 35.15. So just a few pennies below it. I don't want to be the guy who sets it 1 penny below, because oftentimes you'll see it comes 1 penny to below in search of stops, flushes those stops, and then turns right around. So that's kind of how I use the multiple time frames together, the volume weighted average price levels, and there's other things as well. But for the simplicity and for showing how the volume weighted average price works, I think this does a good job.
Love it. Following up on that, are there any other charts besides, Lucid and the other one that you had posted that are just looking really apt right now? Going into tomorrow, especially now that we've kind of gotten over this little hump with the Fed.
Yeah, I mean, a lot of the good stocks have rallied. So I've got, I think Lucid is what I would consider an A setup for tomorrow. So a B setup, I've got a couple of those. One would be Box, BOX, and I like that one above 26.59. And if it were to do that, I think you could put your stop at about 25.91. There's a stock I traded earlier this week and then got stopped out of it, but has kind of reset up, is CHX, which is Champion X Corporation. And if that one can get back above 27.68, I think you could get involved with a stop below, not today's low, but yesterday's low. Today's low was about 5 cents above yesterday's low, but for 5 cents, why not give it the extra room? Oh, and then another recent IPO is OLPX that is looking decent.
Love it. Exclusive, you have a comment?
What was that?
Oh, I was just asking Exclusive if he had a comment. He had his hand up.
Oh, gotcha.
Yeah, no, I was actually gonna point everyone's attention to a chart I had posted here in the space. So if you look at the chart, you see Shake Shack. So there's multiple reasons why this was a good bounce here today, and primarily, we're looking at it and we see the anchored VWAP, right? So that's one form of support. We have a pivot, that's a second form of support, and then we have the golden pocket right below the anchored VWAP, which is a third. So you have a confluence of support from 3 different technicals, which is, in my opinion, is the ultimate dip buy for me personally. And that's how I can make these scalp trades, by identifying these moments in price action.
Got it. Got it. Awesome. Cool. Richard, I want to come back to you real quick. And I had a name that I wanted to throw you. Okay, yeah. So two names that I wanted to throw at you were going to be AFRM and then AEHR.
AHR. Perfect. So yeah, AFRM. Yeah, this is a name I've traded. I currently own it here, and I really like how it's holding above the IPO high. So let me actually take a screenshot. I can tweet this out here. But if you draw a line across from the February 10th of this year's high, that's at 146.9. You can see it's broken through that and now is consolidating and forming some type of structure here above that level. So this is something I always look for. And now what I'm waiting for is really some tightness, some constriction here. And this might not move until earnings. We've got that on the 10th. But in terms of the setup overall, if you go to 65-minute chart, you do have a pivot here under or just over 162.49. So just today, this morning, you had a nice move at the open. Then it went pretty much sideways and set up a little bit. But this is still a pretty short consolidation. I wouldn't call this a base. This is more like a shelf. But I do like how it's let the 21 EMA kind of catch up to price now. And we've got all-time highs, of course, at 165.94. That's another pivot. But I'm always trying to find on lower time frames pivots that can trigger earlier so I can manage my risk a little bit tighter, set my stop loss tighter. And then if we get a cascade of pivots into higher time frames, that's always a recipe for a super quick move. And that's kind of what we saw on the Wednesday, the 10-6 of this year, that huge bar here. We had pivots triggering on basically all different time frames from 15 minutes up to daily. And that's what led to that super powerful move. So ideally, you want to see a breakout on volume just like that into all-time highs and start another trend. Going over to AHR, unless you had some other questions about a firm here. This is another super powerful stock. It hasn't broken the 21 EMA since what I consider the earliest entry at 5.74 back in 823, around there. You had a little bit of a short pivot and breaking above it on 823. And then, of course, we've had some earnings gap ups, and it's just trending. And yesterday, I think, was really a statement where it was down about 8% at one point, but then completely reversed and ended basically green on the day, went red to green. And now we get some fall through. And again, really constructive action, finishing the day pretty much right at all-time highs, and with a really strong closing range on higher volume. Now, once again, we didn't have a longer base. This is still just kind of trending. So for me, it's a little bit extended if you're a more position style trader. But for a swing trader, you definitely could have gone on a longer frame yesterday and kind of looked for an entry sometime around there. If you know Oliver Kelly, you had a little bit of a reversal extension that morning on 11.2, and then a wedge pop on a 65-minute chart at around 1:50 p.m. So I'll post some charts here once I give somebody else a turn to speak, so you can kind of see what I'm talking about here. But yeah, both of these stocks are super strong into all-time highs. Great stories as well. AHR has some nice earnings growth and sales growth, I believe, and Affirm, of course, has all these partnerships coming up and a lot of sales growth as well. So these are both on my watch list. I have Affirm. I don't have AHR. I've actually missed this entire move after catching up on my scans in September and August of this year, but I've never found a spot where I can really manage risk. I've just been focusing on other names. But both of these are definitely ones to watch, especially after they form a nice flat base, some type of longer term consolidation, and then you can buy the continuation up the right-hand side.
Absolutely. Yeah, I was maybe it was just lucky timing. Got it on an AHR maybe about a week ago, and it's already up like 20%.
Yeah, for sure. Did you buy it on the 28th, on last Thursday?
I bought it on the apparently even earlier. I bought it on the 20th.
The 20th. So let me take a look at that. Yeah, so you caught a nice low there. How are you managing risk on that trade? Just curious.
So maybe I need to move it up. I currently have a stop loss that is placed for it's probably pretty low at this point. I set it for actually $17.
Yeah, yeah. Yeah, for me, I'm pretty concentrated in my positions. I usually take a 10 to 20% position in one of my names. So for me, I keep my stops 3%, 4% max usually. So I can't give it that type of room. But if you're in a lot of positions, you can give it a little bit more room. But you always have to manage risk with a stop loss or position size. In my opinion, that's what keeps you in the game for the long run. Because capital preservation is goal number one.
Absolutely. Yeah, I do got to move it up. When I bought it, my average cost is $20.27. So I set that at 17, which was, not too far off. Maybe that was about 10-15%. But
Yeah.
continuously moving this, I think that's the lesson right here that I'm taking out of this is I got to be avidly watching, continuously moving those up to ensure that the risk loss is not going to affect.
Yeah, once I have a profit on a stock, a good profit, 5-8%, I'll usually move my stop up to break even. And then if you're up 20, 15, 20%, you don't want that to turn around and turn to a loss. You've already got a really nice gain in a short amount of time. And yeah, sure, it can turn around, stop you out, and turn back around and keep on going. But you can only act on the information you're given at the time. And you do want to nail down profit, especially if you're up 20-25%, in my opinion.
100%. Okay, so I'm going to go to Brian in just a second because I know that he has some limited time. Before I do go to you, Brian, I just want to remind everyone in the audience, I mentioned this at the very beginning, but not everyone was in here yet. Uh, I do my best to make it really easy to find all these spaces. Of course, right now, Twitter Spaces doesn't have an ability to put out multiple reminders or anything along those lines. So I can only put out, like you saw, that one reminder for this space. However, what I do is I have a public free Google Calendar that is free to everybody. And essentially, if you want to join it, all you have to do is just send me your email. Say you wanted to be added to the calendar. I also write a newsletter as well, which I'd love to add you to, but that's optional if that's your interest. It's kind of focused on finance Twitter, but would love to have more people on this calendar. There's over 350 people now on this Google Calendar. Your information does not get shared with anybody, and it looks like about 20 more people have already DM'd me during this session alone that want to be added onto it. So definitely hop on that. I hosted 14 spaces 2 weeks ago. Did about 10 this week because I'm traveling, but I'm going to keep them coming. And if you're interested in all areas of investing, whether that's crypto or stocks or NFTs or fundamental or technical analysis, I'll try to make sure that there's a space that is specifically designed for you with speakers who are leaders in that industry. We're hopefully going to have, even tomorrow, I think, or even after this in 30 minutes, a space on market psychology, and then a couple tomorrow and a couple the next day. With that being said, Brian, really appreciate you coming on tonight. Would love to hear if you have a few more minutes of any last advice or words for people that are coming into this space, or if there's any other setups that we should keep our eyes on.
Well, as far as other setups, I think a lot of things are pretty stretched here. And, one of my cardinal rules is not to chase things. Having the FOMO buy is, one of the worst positions you can get yourself involved in. I like to be right from the start and know that I'm involved where I have a low risk stop and I can take a maximum position size. If a stock's, extended for a couple of days, you can still make money in it, but to have the confidence to put it on a full size position isn't there. So, when we get to these types of levels in the market and there aren't as many fresh breakout candidates, from solid near-term consolidations, then I will dabble along in some of the, more active names, some of these SPACs that, I did really well with the BKKT, one. I just happened to get involved in that one really well. And, so I'll look at some of the more speculative stuff and trade a little bit more intraday because I am a trader and I do some day trading, but I prefer to be, let the market work for me rather than fight all day long trying to, look at 2-minute charts and that sort of thing.
Absolutely. Yeah, that totally makes sense to me. And I've seen you kind of taking both that zoomed in perspective as well as a bit more of the external perspective as well. I know that last time or this time it's even your charts, they often have kind of the 1 year, but then also even as close as the 15 minutes. And, one thing that I've seen you preach is how often you can use things like Anchor VWAP. Even on today with Allbirds, you were showing how you were using it right off the bat, with the first day of trading, but that it also works years down the line. Why is that, you think?
Because it's the absolute truth of supply and demand. It tells you who's in control from that very first moment. And obviously, I mean, you're not going to look at a 1 minute chart for the first minute. You've got to let it play out a little bit in the case of Allbirds or an IPO. But after about 20, 30 minutes, you'd be surprised at how well that volume weighted average price begins to act as support or resistance in an IPO. And it gives you a level to measure risk against so that you can very objectively control your risk and say, here's where I'm going to get out. Now, for for I've been pointing out, for instance, a lot of people are interested in Pinterest, and Pinterest is coming down to its volume weighted average price from its IPO, and I haven't bought it. It's a level of interest, but it's not always an action point. People always say, here's where support is, here's where resistance is, and I like to think that I've helped people, add the word potential to their vocabulary in describing support and resistance, because we only know after the fact if it's going, if it bounced from the volume weighted average price or the trend line or the 61.8% retracement, as Exclusive was saying, when we have an alignment of, a confluence of indicators that come together, one person might be looking and saying, hey, it's at the volume weighted average price from the IPO. I'm going to stop shorting. Another group says, hey, it's at the VWAP from the IPO. I'm going to start putting bids in. An institution is going to support their stock there. So we have less supply and more demand, and we start to see that on the shorter term timeframes if we take a look inside. And so far in Pinterest, we're not seeing that. We're seeing maybe just a little bit of stability today, in that it didn't go down again, but it's not enough there to say the buyers are back in control. And so back to the point of confluence is, and it's not the case for Pinterest, but, maybe there's a 200-day moving average or a 50-day moving average. Why do these moving averages act as support or resistance? Well, because that's what people are trained. When it pulls back to the 50-day moving average, it often acts as support. So people start buying, institutions stop selling, shorts stop selling and start covering. Same thing with a 61.8% retracement. So when you have these psychological factors, which is all technical analysis is, it's measuring the psychology of the market. If they come together and give us that same reason that a short would no longer want to sell short, and instead maybe start to cover their position, an institution who's long 8 million shares and sold 3 million on the way up will start to stick bids in at that level to give confidence to the rest of the market and support that stock. And then you have sidelines cash coming in and saying, hey, I'm going to stick in a bid here because I heard the 50-day moving average of support. So when these all come together, we've got these various groups coming to the same conclusion in the same area, and they tend to act as a more powerful indicator than just the VWAP itself or just the 50-day moving average itself, or whatever it is you're looking at.
Definitely. I think that's what it all comes down to, is the psychology there. And that's really what's behind anchor VWAP is, right, where most people are, that's their holding price. So based off whether it's above or below that, how humans react, which I think, translates up the chain to how institutions are going to react and how those algorithms that have been trained by humans are going to react. Is that kind of the mindset?
You said it perfect, how those algorithms trained by humans. And that's the key. People say, well, it's the algos. Well, the algos aren't just machines. And people talk about machine learning. How did they learn how to learn? We taught them, right? And it's human psychology, whether computers executing the order faster than we can respond in real time, or if it's humans sitting there pressing the buttons. It's the psychology of the market. It's the psychology of supply and demand and who controls the trend, the buyers or the sellers, from any point in time. And that's the art of the volume weighted average price, is where do you anchor it from? And I'm writing a book about that right now, so it's not an easy answer.
Excited for that one to come out. Definitely make sure that if you're in the audience and this is a topic that you're interested in, you check out Brian's book. It's a bestseller on Amazon. I highly recommend it. Brian, is there anything else? I know I'm just going to go to exclusive for some more comments, but is there anything else you wanted to share?
No, I think we covered a lot there today, Gav, and thanks for hosting these.
Always a pleasure having you on.
Okay,
All right.
thanks.
All right, take care. All right, I'm going to go to you exclusive. So I have a question, and I think a lot of people are wondering this, and I see Sarge in the crowd, and this is kind of something I wanted to talk about today on the street call, but that got, I guess, postponed to next week, which is now that we're past this little hump, I guess, with the Fed and with that mindset, and we've gone ahead and we've set a consecutive, or not consecutive, but we've set a record, I think it's 62nd all-time high for the S&P 500 this year. How do you feel moving forward out of this from a bullish bearish perspective with growth stocks? I think people that thought that a lot of this was going to be built in since there was so much talk around it, and that there's not really major concerns until we come to things like interest rates next year. So now that we, I guess, know the tapering's happening and the S&P still rocketed up, finished at all-time highs, what's your mindset moving forward from a mindset and then also from a technical perspective?
Yeah, so it's hard to really pinpoint because you know, the opinion on market movements, for me personally, is always changing, right? Like one day I'll be extremely bullish on a name, and then the next day I'll be bullish, but I'll expect bearish divergence. So, and Tesla's a perfect example of that. I'm bullish long, but I'm short-term bear. Specifically when, the moment presents itself. With the S&P specifically, I look at all the correlated and co-integrated sectors and stocks, and I think to myself, okay, just like you don't guess the bottom for a bull, you don't guess the top for a bear. You see these moves, and that's why people have been saying, oh, it's going to be the top, it's going to be the top, it's going to be the top, and then it keeps on making newer all-time highs from the bigger perspective of everything. And what's important to remember is that you can't set a plan based on one specific direction. And from a technical standpoint, when I see, the markets reaching these extension levels, I see the volume increasing, I see all these indicators pointing up, and these things at the beginning of the week we're just saying, well, listen, it's going to keep going. So, I'm not saying that the market is just going to keep on going, forever, but, eventually it is going to have a healthy pullback. It is going to happen eventually, but, while it's testing outside of this range into uncharted territory, we're going to keep riding the wave up as long as we can and have a plan B for when it does reverse and start working against long positions. And that's when you kind of take the bull hat off, and I'm not necessarily a bear, but that's when I go a little bit more into cash positions. That's when I focus a little bit more on my common stock portfolio versus option trading intraday or even weekly. So um, there's always a necessity to have more than one option of trading. No pun intended. And I use options short term to make money to invest long term. And that's the reason I trade options intraday, because I'm just trying to go long. And if history has told us anything, something may go down temporarily, but it always goes higher. That's what the market is. It's based on businesses making profit. And as long as everyone's making profit, the stocks keep going up, the markets keep going up. And to answer your question about the tapering talk, until it actually starts, we keep seeing this run up. Keep seeing this momentum build around the tapering discussion. And until it's an actuality, I know that they're talking about more specifics on acceleration and dates and all that mumbo jumbo. But until it's actually happening, I don't see any reason to become bearish.
Got it. 100%. And I appreciate that mindset and explanation of it as well. And for anybody that's, oh, perfect. Sarge is going to come up. Anyone that's interested, exclusive is somebody who I do chat with throughout the day. Very active trader. I texted you, I think at like 9:30, 9:31. I was like, have you made any trades yet today? And you're like, yeah, I made 24. So definitely recommend checking out what exclusives do. And I think there's a link in his bio to his Discord, which is really, really fun place that you can go ahead and check out with some very affordable packages. So that's just one place where, listen, if you're looking for some ideas, you can try and find them. But Sarge, I see you came up. What's going on?
Hey guys. Just one thing you guys should know about the taper, which maybe some of you do, maybe some of you don't, is that the Treasury Department announced their own tapering today. If the Democrats in the legislature don't pass these spending plans that they've been fighting over, the Treasury plans to issue $12 billion less in twos through tens for the month of November, and a total of $84 billion less two through tens for the next 3 months. So the Fed, by cutting back $10 billion worth of Treasury purchases a month, isn't even keeping pace with the reduction in supply that's likely to come over the next 3 months if there's no infrastructure build and if there's no climate-based and social-based spending package.
Interesting. Richard,
I
did you have a
completely
comment? Oh,
forgot about
excuse me.
that. Appreciate it.
Yeah, it's the stuff that doesn't make the news is really incredible because I only saw like one small blip, so I actually went to the Treasury's website and read up on their projections for the next 3 months, and their tapering is much more aggressive if there's no spending package passed than the Fed's. Now, if the spending packages are passed, then obviously they're going to look to the Fed to fund the federal government, and then it gets really messy if they keep trying to pull back.
Interesting. Yeah, I actually also didn't know about that. Shout out Sarge for bringing us the real information.
Well, I'm an economist.
It's true.
I know the weird
It's true.
stuff.
Absolutely. You're definitely digging into it. Okay, so I am going to maybe do another couple minutes and then move into some wrap up, just because I do have another space at 8:15 p.m. EST tonight, which will be doing market psychology. Real quick, just to answer a couple of questions that are being thrown in the DMs. So a couple of people have asked about the newsletter, which I mentioned, and I'm happy to add people to that newsletter as well. If you want that, feel free to just shoot me your email, or you can go to the Wolf account. Again, I do run the Wolf account. I'm just building up my personal account, making some friends on here. I can share a little bit more information on this account than I can from the Wolf. Talk about my own personal trades, things along those lines. So if that's something you're interested in or engaging with, and I'm hosting a lot more spaces from this account, be sure to follow the Gov account. I'd really appreciate that. However, if you want to sign up for the newsletter, it's really easy in the Wolf bio because I do it through Twitter. You can just click on the subscribe link inside of there, or just send me your email. I'm happy to add you to it. Either way works. With that being said, I want to go back to you, Richard, real quick, just to see, moving into the latter portion of this week, if there are any other setups which, you're excited for, you're keeping your eye on moving into the last couple of days, and then after that, we'll do a little bit of wrap up.
Yeah, sure. And yeah, some of them have already been mentioned. AFRM is one I'm watching for an add-on to my existing position. I think Brian Shannon actually mentioned OLPX, which is an IPO I'm watching as well. But I am pretty invested at this point, and my general feeling is we're a little bit short-term extended. A lot of stuff has made a bunch of moves, so I'm not necessarily looking to add to positions at this point or add too many new positions, just because there's that little bit of added risk here. And for me, my best trading is when I wait for the setups to come to me versus try to kind of force anything, if that makes sense. But also, I'm also watching Unity Software, ticker symbol U. This had a nice move off the 21 EMA here. It's in a little bit of a short-term shelf, and the overall pattern is something that I like to really focus on here. We've got initial move off its IPO, then a nice long-term consolidation, and now a steady rise up the right-hand side. So what I look for here is some type of pivot along the right-hand side, under a short-term consolidation, and then ideally a breakout and push through those all-time highs. But those are three, OLPX, U, and AFRM, which are kind of my focus into the end of the week. But in general, like I said, I'm a little bit cautious with taking new longs at this point.
I hear that. But at least you're hedging them really properly. So even when you do take those longs, there's minimal downside risk as it appears. Well, not minimal, but calculated is I think the word for it.
Yeah.
Perfect.
Yeah.
Yeah. Thank you, Richard. Okay, and then I'm just going to let's see if there's anything else specific to hit on. I'm just looking through some of the DMs. A lot of people talking about crypto. Exclusive, I'll ask you real quick. Do you use technical analysis on cryptocurrency? Do you trade it at all?
Absolutely. If anything, cryptocurrency respects technical analysis more than the stock market. So it's definitely technical driven. I think some of the swing failure patterns and wake off distribution and accumulation patterns, all these are so much more respected on crypto that I only trade a few. I have a pretty big position in SHIB just for the sheer fun of it. But I have long positions in Bitcoin and Ethereum for obvious reasons.
Got it. I've definitely seen more people utilizing it as well. When you talk about something that doesn't have earnings, doesn't have other, typical things that an equity would have, it definitely can help to have some, technicals to play off of. I see somebody just posted a Solana chart where they're looking at a cup and handle forming as you had this peak up around 216, and then now you have the cup, and then the handle is forming right now. So listen, I bought into Solana around $40, but it might be time to add again soon. Did you have another comment? Okay.
Are you talking to me?
Hearing. No, you're all good. I was just hearing the mic. Cool, awesome. So let's move into a little bit of this. So I would say in final comments, anything that you think, beginners should know about technical analysis or experienced people, right? There's a lot to learn. Some of the ways that you use it, and then anything else that you want to share. Richard, would love to hear from you first.
Sure. So one thing or a few things that I always like to look for are character changes in the chart. And this definitely takes a little bit of experience to notice, but these can be huge volume gap ups out of proper consolidations. They can be the highest volume ever over the past 250 days or ever even. And basically, these are signs that institutions have become more involved in a stock. And often after these occur, there will be a promising setup where the chart really tightens up on the right-hand side and develops a really nice pivot. And that's often a really good ideal buy point to, as I said, catch one of these big winners as they try to make new all-time highs or just trying to trend higher above the moving averages. So one thing I would stress is try to analyze the stock, see what's holding up better than the rest of the market, showing relative strength, and then look for those character changes that signal that this could become a really big leader if the market is cooperative.
Absolutely. And Richard is definitely worth the follow, co-founder over at TraderLine. Really, really cool platform. There's a reason he's about at 60K followers. I remember you're just at 50K, and amazing newsletter, YouTube channel, and everything else going on. Plus, it looks like it's Santa season. Am I right?
Yeah, somebody sent me over this photo, so I figured I'd since it's after October 31st, it's time to start thinking about Christmas. So
Yeah, that
gotta
counts.
throw it on.
That counts.
It's time for the Santa rally. uh, Exclusive, would you like to go next?
Yeah, sure. I still need to put up my Christmas tree too, by the way. I'm slacking. I'm a couple days late. Um, yeah, no. Let's see. I'm trying to narrow it down to just one or two. Um, other than Shake Shack, I think we posted Electronic Arts. I tagged it in the space. So we got a really big frying pan, aka cup and handle, also just a different formation of it. Really, really good consolidation. Looking for, I don't think it's necessarily a good short-term play until it breaks that pivot at 151.26. And then we can see probably some 4 to 6 month out swings on options. But I mean, on equity, it's definitely a good long once it breaks. So really bullish on that long. And I think the overall target on that would be the 158 to 162 mark within a few months. So that's definitely something I'm probably going to add some common stock to once I get that confirmation. And again, I like to wait for the confirmation instead of the anticipation because the anticipatory trades are the ones that usually fail. So I'm going to wait for confirmation before I enter, which is why I didn't enter QuantumScape the other day because I was waiting for that dip. So other than that, gonna keep riding these sectors that are just performing. I mean, I'm obviously going to be watching Tesla, but some of these other EV sympathy plays, AFRM, I'm also looking at that. Qualcomm, RKT, Twilio. I mean, there's just so much that's working right now. And for I would say for beginners who are trying to learn the basics of technical analysis, there's a lot of good material, a lot of videos on YouTube, but really I would say try not to learn one person's specific style because technical analysis is open to interpretation based on the trader using it. So it falls back on trader psychology. That's all technical analysis is the ability to measure how people are thinking and put it into a math equation. So definitely read, I think Schwager, I think is how you pronounce his name. He has a book. It's really cheap. It's called Getting Started with Technical Analysis. That's probably one of the first books I've ever read in technical analysis, so it's really good just for general basic stuff like that.
Love it. Appreciate that. And always down for a good book recommendation. I know that a lot of my followers always recommend those, and they usually pop in the DMs and they're like, what was that book? Oh, just a reminder, if anybody's been listening and you had to take off for a few minutes or anything like that, this was all recorded. Big shout out again to Angie from Black Box Stocks, who did the recording, is going to shoot that over to me, and I'll do my best to have it up onto YouTube tomorrow. So that'll be up, and then I'll post that onto Twitter. So as long as you're following, you'll be able to see that come up on your timeline. And of course, you can check it out. We just hit 1,000 subs on the Wolf YouTube, and I think we're coming up on 500 on Spotify. Richard, do you have a comment?
Yeah, I just want to mention, following up with what Exclusive was saying. Yeah, I may or may not be interviewing Jack Schwager on Friday. So go ahead and follow me in the Trailine channel, and you might just get a treat here. He's also got the Market Wizard series, which is one of my favorite trading book series. So yeah, that's
What are the odds of that? Appreciate it.
Yeah.
Hey, Richard, real quick. I saw you interviewed Mark Minervini. You didn't happen to ask him what Upstart does, did you?
No, we didn't happen to go over that chart, but he's up 277%. He doesn't have to know what UPSD does.
It goes up, man. That's what it does.
Yeah.
I'm sorry, you were breaking up.
That's cool. Any hot takeaways from that call?
I mean, he's basically he provides some really cool nuances about execution and what he looks for in the chart right before he buys. But if you've read his books, it's really just reinforcing those concepts. Risk management. I mean, he's the king of risk management. And yeah, just talking about how he traded in 2021, sizing up and selling into strength quickly, selling the rips, because this has been a little bit of a choppier market, especially for breakout style trading. But yeah, I would highly recommend it, especially if you haven't heard him speak yet, and if you only know him from that interview. He really knows his stuff. He's been doing this for decades. He's won U.S. investing championships, and Think and Trade Like a Champion and Trade Like a Stock Market Wizard are really fantastic books for beginners to really master technical analysis and also, as I said, the risk management side of things.
Love it. Sarge, any words of wisdom for us?
Words of wisdom. I can point out one thing. Albemarle, ALB, you guys might notice it. It's breaking out of a 244 pivot, 268 last. It's up about 3%, which is $8.50 tonight. Solid earnings. They raised expectations. They did very well with lithium, which is involved in the EV sector a lot. That lithium's only about 39% of their revenue. You have another stock reporting tomorrow night called Levent Corporation, LTHM, which has already started to break out, but it's not all the way there yet. This one is more of a lithium-focused firm, and you got about 24 hours there, so you don't have to rush in and get in before the ARCA close, which is in about 5 minutes. You can wait till the morning, I think, and then take a look at that one.
Awesome. Going to be keeping our eyes on that. You got any other Twitter spaces you're going to be on coming up, Sarge?
I kind of bump into you whenever I see you guys. I try to hop on unless I can, or unless I know I just have a few minutes. But whenever I see you guys, any of the ones you guys are involved with, I usually try to just tiptoe in and see what you guys are talking about.
Sweet. Well, we appreciate you coming on.
All
All right.
It's better than watching CNBC. I'll tell you that.
Yeah, we get the news faster. And the reason we get the news faster is because we have my wonderful co-host, Stock Market News, who breaks the news fast as anyone on the internet. So appreciate you chilling with us tonight, Evan. Would love to hear if you have any final words.
Yeah, man, I was only able to catch the second half of this one, but I'm pretty upset. Based on the speakers we have on this panel, it is an awesome set of speakers. I just want to encourage everyone, give them a follow, check them out. Richard, Sarge, Exclusive, all amazing accounts. Shout out to Wolf, always putting these on. If you're a fan of Spaces, which clearly you are, you're in here, give him a follow. He's always doing these. He's a must follow. Same thing with the Gav Blacksburg account that's hosting this. That is his personal account. It's a good follow on there. And then quickly, I know, Wolf, you do a lot. I don't know how much you've talked about the calendar. But Wolf does so many spaces, and he'll explain it to you, but he has a Google Calendar which will tell you when all of them are. Wolf, note this, explain that better because I sucked at it. But Wolf also has an amazing newsletter that he puts out Friday. It's pretty great. It's the perfect time for it. It is, half educational, half more fun. It comes out Friday afternoon. I think that's definitely a good follow for anyone on that one. So, Wolf, explain the calendar for me because I did a terrible job. But just know when you send him a DM for this amazing thing that you guys need, ask to be on the newsletters as well.
Appreciate you. Also, Jonah, I see you hopping in. Sorry, Jonah, you came right at the wrap up, but we'll be doing another one in 15 minutes, and we'll keep you very entertained. And you're welcome to come up at any time if you want to, give a shout. I'm sure the Celsius is pumping through the veins right now, and I saw the back and forth on Celsius that you were doing, so I'd love to have you up in one of these spaces to chat about it. But yeah, I mean, Evan.
I think you muted yourself.
Yeah, we can see your little thing moving, but we can't hear nothing.
It's crazy timing. Can you guys still hear me? Because I just got a notification saying the host is having problems.
Yeah, I can hear you fine.
I can hear you.
I got that too.
So, Wolf, I don't know if you can hear us on the back end. I think whatever we're going to happen, kind of just, unfortunately, due to Twitter Spaces connection, I don't know if you can hear us, but maybe end it. All right, you know what? I'm going to be in a new game here, and I'm going to win. Who's up here last? So, Richard, Sarge, exclusive, you're on. And I look forward to being up here silently.